And we're not going to waste an extra second, okay? We'll just go right into it, and let's go ahead and share this information with you. So again, what is the most crucial step to save $15,000 or more in taxes this year? Well, by the end of this webinar, the number one goal is that you get a clear idea on how to avoid a huge tax bill when running a profitable and or cash flow positive business. Let me say that again. By the end of this webinar, you should have a clear idea on how to avoid a huge tax bill when running a profitable and or cash flow positive business. You should also know if your current CPA is not telling you everything that you need to know. And last but not least, you will understand what is the most crucial step to take to save $15,000 or more in taxes. Now, why am I even qualified to speak to you tonight? Well, my name is Fabrice Matan. I'm the founder and lead accountant at Simplify My Numbers. I actually graduated in 2010 at Wichita State University with a bachelor's degree in accounting. And in 2015, I was able to get my MBA. Now, from 2010 all the way through 2018, I went from starting as a financial accountant to then becoming a controller with a few accountants and office managers working under me, to then have more of a CFO position for a group of construction companies that I was helping basically manage and monitor the profitability. And they were grossing somewhere around $30 million combined on an annual basis. Now, in 2018, I made the decision to, take the leap of faith and start my own agency, Simplify My Numbers, because I understood that the experience and the knowledge that I had gained could be a game changer for small businesses. And so when we started the company, it was literally just bookkeeping, payroll, and CFO services at the time. But even though you can be a great CFO and help your clients become more profitable, become more cash flow positive, manage their money, understand collections a little bit better and get financing, that's one thing. But the other side of the equation is how to make them keep as much of the money that they work so hard for. And that's when I realized that it was impossible to do fully or to the best of our ability without including the tax code in the equation. And so in 2019, I started our tax division because I wanted to figure out how to use those strategies to help my clients save as much of the money that they make as possible. And so we've been filing taxes for the past 3 years, but I'm super excited about what happened in 2022. So this year, this tax season, we were able to complete 139 tax returns, and we were able to save $1.6 million in taxes for our clients. Now that really got me excited because that's an average of $11,511 per client. And so a lot of this was made possible through tax planning, right? Being able to meet our clients around this time of the year to try to see everything that they've done so far and kind of figure out how we can utilize the tax code to their advantage. And so this year, I made it a point to make sure that we can have the same thing going, if not better, by having more clients that we meet at this time of the year. Now, like I said earlier, I don't want to waste your time. I do not take your time for granted. And so it's 7 p.m. on a Tuesday night. We all have families. And I understand that we would rather be somewhere else right now. And so I want this to be very beneficial to you. And if it's not for you, I totally understand if you have to log off, okay? So I want to be clear on who this is for, who is going to gain the most out of this, and who it may not be for. And so number one, who is this not for? Well, if you always get a huge refund every single year, there's a chance you may not get the most value out of this webinar. Because You're probably in a position of giving too much money away to the government throughout the year. They simply turn it around and paying it right back to you with no interest, right? And so you may not have a big enough problem for us to solve tonight. If you are the taxpayer who uses, applications like TurboTax or TaxSlayer to be able to, basically file your own taxes, here again, you probably do not have a big enough problem for us to solve tonight. Last but not least, if you are the taxpayer who does not own a business, you do not invest, and you have no intention of doing so in the near future, here again, this may not be the best use of your time. However, if you are a taxpayer who actually runs a profitable business, which means that in 2022, you probably made more money in your business than you expected. You're cash flow positive, you're running a profitable business, you are in the right place. If you are the taxpayer who is currently sitting on cash and worried about what the tax liability of all of their activities this year might be, again, you are in the perfect place. And I have a ton of clients like that, literally sitting on cash, not ready to spend any money because they're not sure exactly what the tax implications might be until we have our meeting at the end of the year. And last but not least, if you are the taxpayer who always complains every single year when your CPA tells you how much money you owe in taxes, this is the right spot. So I believe you're going to gain a ton of value out of this webinar. And so let's dive into what our agenda is tonight. Number one, we're going to talk about the difference between tax planning and tax preparation. Number two, we're going to dive into real life examples, right? And so, meaning we're going to actually dive into 5 specific tax strategies and how they've helped some of my current clients or situation that I know of. Third, we're going to dive into what we do at Simplify My Numbers and how we can help you in your tax planning. And then last but not least, if you stay with me until the end of this webinar, we should really take just another 20 minutes or so, you will receive a free gift that I can't wait to share with you guys. And so what exactly is the difference between tax planning and tax preparation? I would love for you guys to chime in and kind of give me your thoughts on this, if you don't mind, so that it's not such a, a conversation with myself, right? I would love to hear from you. What are your thoughts on what the difference might be between tax planning and tax preparation? Anybody? Any thoughts? Looks like everybody's too shy to chime in tonight. So we'll go ahead and dive right into my description here. And so tax preparation is literally just doing what the law requires. You are a taxpayer, you're making a certain amount of money, you're legally required to file a tax return. We're simply filing the tax return for you. We take what you have and we just file. Now, tax planning, however, is a little bit different because that is the analysis of a client's current situation and then implemented all of the tax strategies to create the most efficient tax profile for them. Basically, the goal is to minimize your tax liability as much as possible. We want to ensure that you pay the lowest amount of taxes possible. That is the plan when we talk about tax planning. And so now that we're about to dive into my favorite part of this webinar, which is, real strategies, real life examples, the first thing I'd like for you to do is to keep in mind this acronym as we go through these strategies. POND, POND. And this is how you can turn every expense into a tax write-off. So P stands for primary, which basically means that the expense must be at least 50% for business. O stands for ordinary, meaning that the expense must be typical for the type of business that you run, for your industry, or even the type of position that you hold in your company. N for necessary, meaning that the expense is needed for your business to make money or to operate. And D, documented, which is pretty self-explanatory. We want you to keep your receipts, your backups, just so that in case of an IRS audit, we're always prepared to show what type of expense you have. So as long as these 4 rules are met, almost anything can be a write-off. And so every single time that we're planning, we're using all 4 of these rules to figure out how to turn our clients' normal expenses into a tax write-off. And so let's dive into these strategies. Gets exciting, guys. Number 1, have you ever heard of the Augusta rule? Now, most business owners, most small business owners are probably well aware of the home office deduction. What you don't know is that when you take the home office deduction and you use what's called the simple method, the IRS is only allowing you to write off $5 per square foot in your home, up to $1,500, up to 1,500 square feet for your exclusive space for your home office. So in other words, I take that back. So it's basically $5 per square foot up to 300 square feet. So the total that you can write off is $1,500 maximum when you take the home office deduction simple method. Now, the Augusta rule is totally different because this is a play when the IRS actually allows you to reimburse yourself from your business for up to 14 days of business use of your home. Guys, I'm not sure if you understand how big of a deal that is. Basically, you can reimburse yourself for up to 14 days of business use of your home. Reimburse yourself from the business. So to give you an example, one of our clients was a janitorial service company. The owner used to basically use his basement as an area to have meetings with his contractors and discuss the next projects that they're about to, to go work on. So he would have those meetings once or twice a month with all of the contractors. They come in, they discuss the projects, they chime in on different ideas and things like that. And in that basement, he had, tables, chairs, he would get snacks, drinks, and then a big screen where he could connect his computer just to be able to show, the different plans and things like that for them to be able to strategize. Well, once we found out exactly how he was doing this, we realized, wait a minute, we can actually call around the city to different hotels or different places that might have the same style of conference rooms and figure out what the market rate would be for one day if you were to rent this out. And we found out that the market rate was going to be between $500 to $700 per day. So what we ended up doing is basically taking the $500 daily rate, market rate, times 14 days and get him a $7,000 write-off. But what we did is he was able to write himself a check from the business to himself for that $7,000. He does not have to pay taxes on that money at the personal level, but on top of it, the business now has a bottom line that is reduced by $7,000, meaning that you do not pay taxes on that $7,000. Does that make sense? You actually pay less taxes because you reduced the business income by the $7,000, but at the personal level, you just received the cash in your bank and no taxes to be paid. Guys, these are powerful strategies, and the only way to be able to implement them correctly so that you do not have to face an IRS audit is by doing tax planning and implementing this the right way, taking all the steps that are necessary to do this correctly. Number 2, how about shifting and splitting income? Now, you may already know, or not, but the IRS allows us to pay our kids for working in our own business. Now, the reason why we call that shifting income is that this is allowing you basically to move funds from your high tax bracket to your kids' much lower tax bracket. And this is for kids that are under the age of 17. So a lot of them, more than likely, at 8 or 10 years old, do not have another job, correct? But they can work for you. And so by shifting the funds into their account, now all of a sudden, you can pay them all the way up to the standard deduction for single taxpayer, which in 2022 is $12,950. You can pay them up to that amount, and the kids will not have to pay a single dime in taxes while you get to take a deduction for that full amount. Now imagine you were to do that for 3 kids. You have one kid that helps you, shred paper in the office, another one that takes the trash out, another one that does this and that. And all of a sudden, you have 3 kids that you can write off up to $13,000 per kid. That is a $30,000 deduction. At a 30% tax bracket, that's a $10,000 saving. So you really, really, really got to think about those strategies. And again, it's all about the implementation and how to make sure that we implement this correctly so that you can pass an audit with flying colors. Number 3, bonus depreciation. Now you might have seen on my social media pages where I mentioned in the past few days that bonus depreciation is about to change quite a bit after this year. But what is depreciation? So essentially, depreciation is when the IRS is allowing you to write off a percentage of the purchase price of eligible assets. Eligible assets would be things like large equipments, vehicles, real estate improvements, software, big items that are considered assets, right? The IRS is basically saying each of those items have a depreciable life. So you can only write off a portion of the value every year for as long as that, that time frame goes. So if you take, for example, equipment depreciates over 7 years. So if you buy my construction guys, for example, buy a big piece of equipment that costs $70,000, all of a sudden you can only write off about $10,000 per year over the next 7 years. What bonus depreciation does for you is that it allows you to accelerate the depreciation and write off the entire amount within that first year. I don't know if you follow me here. You can write off the entire amount within that first year. And so very quick, there's a quick question that just came in about whether that applies to home improvements on a house. It depends on the home improvements. And so we can dive deeper into that, but depending on what it is, and when it comes to improvements on a home, you have to be very careful because we have to do what's called a cost segregation. And again, this is not the webinar for it because there's so much detail, but the cost segregation, it allows basically to separate cost of certain part of the home or the building so that you can take bonus depreciation on those parts. Because, for example, flooring or roofing, things of that kind, we can separate it from the actual structure of the building so that you can take advantage of those write-offs. Does that make sense? And so, yeah, we'll definitely talk more, on those ideas here so that you can better understand how to use them. But so the whole thing with bonus depreciation is that it allows you to basically accelerate your depreciation. So, a lot of people were complaining, for example, about Donald Trump not paying any taxes, right? Having only $750 of federal income tax, I believe, that he paid when he was president. And the thing about it is that this is how he was able to get away with it, from bonus depreciation. Because if you're making, say, $3 million in wages, in income, for example, but that you're able to show depreciation for $3 million to write off at the same time, all of a sudden you have no taxable income. That is the type of stuff that you can do with bonus depreciation. Now, the reason why it's a big deal this year, this is the last year that bonus depreciation will be at 100%, where we will be able to write off 100% of those assets within the year. Starting in 2023, it goes down to 80%. And then after that, 20% every year after that, until it's completely gone. And so very important for 2022 to talk with your tax advisor or with us about this and how to implement that for your business. But yeah, those are, how big those strategies can be. And again, just got to implement them correctly, right? 2 more strategies for you. Speaking of strategies that are kind of going away at the end of this year, business meals, right? What happened in the pandemic is that the restaurant industry obviously was decimated. So what the IRS decided to do was, if you're a business owner and you have business meals at restaurants, they would allow us to now write off 100% of those business meals, right? And what happens is, because in the past, it used to be only 50%. So we got 100% write-off in 2021 and 2022. In 2023, it goes right back to 50%. So again, we're in the holiday season. Maybe it's time to treat yourself. And then it's also time for planning. So if you're going to meet with your advisors, maybe it's time to have a business lunch, right? You just really got to be smart about how you keep track of it for your record keeping in case of an audit. I'm always going to tell you that, right? Because this is basically what we do. We try to protect our clients in case of something like that happening, because those are fairly unusual tax write-offs, and we just have to make sure that they're implemented correctly. Last but not least, probably my favorite one, the weekend sandwich rule. Did you know that if you were to take a trip, as long as 50% of the purpose of that trip is for business, 100% of the travel expenses are a tax write-off? Now, why this rule is pretty cool is that, let me give you an example here, because that actually qualifies for my current situation. Next Friday, I'll be taking a trip, and I will be using this strategy. Let's assume that you're trying to have a weekend of leisure, Saturday and Sunday, but that instead of going on Saturday, you travel on Friday. You arrive there, you find some business activities. Maybe you go to a conference, maybe you meet with a partner, maybe you meet with other business owners that do, kind of what you do, or you do some market research. And then you enjoy your Saturday and the Sunday with your family, right? It's the holidays, so we all want to go visit our loved ones. And then you stay on Monday again and find more business activities to do. Now, all of a sudden, because you spend 2 days working on your business and 2 days enjoying yourself, the entire trip becomes 100% deductible. So your hotel, your flights, your meals, all of that becomes 100% deductible. You just have to be able to document it in a way that shows to the IRS that you planned for it, that the initial plan for this trip was for business purposes and not for leisure, so that they can say that obviously, if it wasn't for the business, you weren't going to take that trip anyway, right? And so if they can see that, then all of a sudden 100% of that trip becomes a write-off. So this is the type of strategies, guys, that we teach our clients, that we implement for them during our tax planning sessions. And so I wanted to kind of share that with you so that you can see potentially how this could help you and how our company may be able to help skyrocket your tax savings. So what do we do at Simplify My Numbers? We do what we like to call an ultimate tax planning consultation. Essentially, it is a recorded session, virtual session, just like the one we're having right now, where we spend about a couple hours with you, just learning about everything that you've done this year. We spend quality time with you to understand your business, understand what, how much you made this year. What do you think you're going to net? It's even better when you have your numbers together, when you already know kind of where you're sitting at this time of the year, and you're bringing all of that to the meeting so you can ask all of your questions, right? And so we spend time with you discussing that, and then we project where you're going to be for this entire year, right? and we actually go through the numbers, right? Now, after we figure that out, we then dive into the tax strategies that you can qualify for based on your particular situation, right? So if you're qualifying for certain strategies, we will then add those strategies to your plan to figure out exactly how you can slash your tax bill in half, if not make it go away completely. It depends on your situation. It also sometimes depends on the cash flow that you have to be able to invest into different things. For example, paying the kids, moving the money here, moving the money into a retirement account. There's just multiple things that we can do to completely change your tax profile, right? Now, in addition to all of that, at the end of the call, we'll send you a follow-up email with all of the reports and the step-by-step plan on how to implement all of the strategies that we talked about. We're also going to give you priority placement on our tax season calendar, right? Because when tax season happens, guess what? Everybody wants their taxes done yesterday, right? So we can't guarantee that you'll get your taxes done as fast as you'd like to, but this is a way to get priority placement on our calendar. You also get $100 towards, $100 credit towards your 2023 tax preparation fees. But another thing that we do is that in December, our assistant is actually going to give you a call to check on you and follow up on all of those strategies to make sure that you took all the steps that we recommend, right? Because without you actually taking the steps, you may not see those savings. So there's a few secrets that we're going to give you, and we're going to say it's going to be very simple for you to go ahead and execute, but you still got to execute. And last but not least, guess what? The amount that you pay for the session is actually a tax write-off as well. So how about using the IRS to help you pay for this so that you don't have to pay them? It's a no-brainer. Now, the market price of a tax planning session or strategy is usually 30% of the estimated tax savings that we find you, right? So earlier, I mentioned to you that I think in 2022, we saved about $11,511 to, in average to our clients. And so if we save that kind of money, most people in the market will charge you 30% of that amount, which means the price will be somewhere around $3,450. But I simplify my numbers, we try to do things a little bit different. And so instead, we charge a flat fee of $695 for a session like this, with everything that I mentioned that is going to come with. Our goal and the value that we want to be able to bring to you is that we want you to be able to 10x your investment. So in other words, you're investing somewhere around $700 for the session. The goal is for us to find you around $7,000 in tax savings. Okay, so 10x your investment. And of course, tax planning takes a lot of attention, right? So it's more attention than I've ever given in the past, to previous clients. I wasn't giving a tax planning session that extensive, but now we are. But the goal is to really spend quality time with each of our clients. And so we're only accepting 30 tax planning clients this year, for the simple fact that we have to be able to spend time with them, right? We have to be able to make sure we can answer the emails, the phone calls as they're implementing those strategies. And we literally have 60 days to be able to knock this out, right? So we're only taking 30 clients, and my assistant actually shared the link in the chat right now. I believe you should be able to see it, but let me make sure that I actually share it as well in case you don't. There you go. So that's the link to be able to register. I believe we still have some dates this month, if it's something that you're interested in.